Hello, I'm Noelle Lim on ASEAN Speaks by Maybank. Bank Negara Malaysia hiked the overnight policy rate to OPR by 25 basis points within Maybank's forecast. How many more hikes are in store? Likewise, what moves can we expect from central banks in the Philippines and Thailand to tame inflation? We also look in Vietnam's rise as Asia's next digital tiger and stocks on our radar. Finally, with the situation in Russia, Ukraine, what is the outlook for coal prices? Check out our report on coal in Indonesia. Here is Winson Phoon, Head of Fixed Income Research, with updates from our analysts.
Hi, good morning everyone. It's 8 o'clock on Tuesday. A quick market recap. Global risk sentiment improved slightly over the past 1 week, with the S&P 500, Euro Stoxx 50 and Nikkei indices were all higher, but Chinese stocks fell on fear of COVID resurgence and renewed sell-off in the Chinese tech sector following new regulatory fines on Alibaba and Tencent. Macau's casino stocks plunged as the city will shut almost all businesses, including casinos, from Monday to curb COVID-19 outbreak for about a week. In ASEAN, stock performance was mixed. The stock indices of Singapore, Indonesia, and Philippines were higher, while Malaysia and Thailand fell slightly. US Treasury yields jumped last week after the US non-farm payroll, which added more jobs than expected, and the average hourly earnings growth remains strong at more than 5% year-on-year, while unemployment rate was unchanged at 3.6%. The US Treasury yield curve, 2-year and 10-year, inverted again, and the Fed funds futures is almost fully pricing in for another 75 bp hike at the FOMC meeting later this month. On FX, the euro-dollar spot is sliding toward parity, which will be the first in almost 20 years since 2002, as energy supply concern and the risk of recession are weighing on the Eurozone outlook. In the UK, Boris Johnson resigned as the UK Prime Minister last week. The pound-dollar spot rebounded on a knee-jerk reaction, but then gave up all the gains amid persistent dollar strength. Later, we have Andy to comment on FX later. On US-China tariff, President Biden said his administration is still discussing on the topic whether to remove any tariff. While on China, the COVID cases are rising in Shanghai, which found its first case of the more contagious subvariant of the Omicron virus, raising concerns that the city may reimpose lockdown again. In order to boost the economy, China is planning a stimulus package to accelerate infrastructure spending by allowing local governments to issue 1.5 trillion renminbi of special bonds in the second half of this year, according to Bloomberg News. ASEAN countries are also seeing rising COVID cases recently, but without heightened restrictions. Last week, Malaysia Bank Negara hiked the OPR by 25 bp to 2.25%. Later, we have Suhaimi to comment on this. On global energy and base metal commodity prices, they continue to fall. The West Texas Intermediate plunged below $100 per barrel at one point last week, before recovering above the $100 threshold. Base metals like aluminium, copper, and nickel continue falling, cumulatively down by about 20-30% over the past 3 months. Looking ahead this week, the key economic event to watch out for include the US CPI on Wednesday, and we have the second quarter GDP number for Singapore on Thursday and China on Friday. Whereas for the central bank meetings, we have both the Reserve Bank of New Zealand and Bank of Korea. Both are expected to hike rate by 50 bp each. This morning, we have Suhaimi on Malaysia OPR and GDP estimate, Zamros on Philippines inflation, Joye on Thailand inflation, Andy on FX, Brian on Vietnam economy, Huy on Vietnam equity strategy, and Richard on Indonesia coal sector. And let's start with Suhaimi. Suhaimi, BNM hiked the OPR by 25 bp within yours and market expectation. Any update on the language of the MPC statement, and how many more hikes do we expect for this year and next year?
Hi, morning Winson, and good morning everyone. Yeah, BNM as expected raised OPR by 25 bps last week to 2.25%. So this is the second increase this year after the 25 basis point hike to 2% in May. I think from the monetary policy statement or MPS, we noted that Bank Negara sees slowing global economic growth, but at the same time maintain the view domestic economic growth is strengthening. So Bank Negara's real GDP growth forecast range of 5.3% to 6.3% is maintained. And Bank Negara indicated that this year's growth could come in at the higher end of that 5.3% to 6.3% range. So in line with our forecast of 6% for this year. On inflation, Bank Negara also maintains its 2022 forecast for headline inflation rate of 2.2 to 3.2%, and for core inflation rate of 2 to 3%. But Bank Negara indicated higher inflation rate in coming months after inflation rate picked up to 2.8% in May from 2.3% in April. But the upward pressures on monthly inflation is expected to be contained primarily due to price controls and subsidies. The MPS concluded with a positive domestic economic growth outlook for this year, setting the conditions and right timing to further adjust the degree of monetary policy accommodation. And MPS also reiterated that the process of unwinding monetary policy stimulus, i.e. OPR hike, will be measured and gradual. So we interpret measured and gradual to mean further future OPR hikes will be by 25 basis point quantum, notwithstanding the ratcheting up of US Fed's interest rate hikes from 25 bips in March to 50 bips in May and 75 bips in June, alongside the indication from futures market that next week or late this month, FOMC will see another 75 basis point increase. So our OPR outlook is a total of 75 bips hike this year to 2.5%. So we are looking at another 25 bips next quarter. And there's another 50 basis point increase to 3% in the first half of 2023.
Speaking of Malaysia's second quarter GDP, the figure will only be available around mid-August, but you have estimates on the monthly GDP based on higher frequency data. Can you share what is the trend you are seeing currently?
Looks good. I mean, we estimated Malaysia's economy grew by 7.7% year-on-year in May. So that's up from April's 6.7%. So April-May average is 7.2% faster than first quarter's actual growth of 5%. So this reflects continued and faster double-digit growth in distributed trade index that cover the retail, wholesale, and motor vehicle trade volume. That jumped almost 15% in May from April's 10%, as well as picked up in the output of manufacturing sector to 6.9% in May from April's 6.2%, and picked up in power generation, which in May grew 2.8% from April's 1.5%. So it offset further production declines in mining, which fell almost 5% in May after a stagnant April, and the drop in CPO outputs of 7% in May from 4.3% decline in April. And just want to highlight also, I think this pickup in growth momentum in the first 2 months of last quarter is largely driven by consumer spending, because the growth in the weighted average of retail trade index and motor vehicle trade index surged by almost 24% in May from April's 14.5%. So that gives April-May growth of 19% year-on-year compared with first quarter expansion of 5.9%. So this signals faster growth in real private consumption expenditure last quarter after it picked up to 5.5% year-on-year in first quarter. So I guess the surge in this consumer spending indicator reflect pent-up demand and spending on full economic reopening, plus stimulus from EPF withdrawals, as well as improvement in job market condition. Monthly GDP is likely to strengthen further in June, taking cue from the surge in manufacturing PMIs year-on-year growth, signaling stronger manufacturing output. And further, to recap, monthly GDP shrank in June-September last year. So it does point to the prospect of low base effect boost to monthly GDP growth in June-September this year.
Thanks, Suhaimi. We'll move to Zamros on Philippines inflation. Zamros, headline CPI in Philippines increased further to 6.1% year-on-year in June, which is above the BSP's 2 to 4% target range. What are the drivers and any change to our forecast?
Hi, morning, Winson. Morning, everyone. Yeah, the 6.1% year-on-year headline inflation in June was higher than the 5.4% year-on-year in May. That makes the year-to-date headline inflation of 4.4% year-on-year and very much higher than the BSP's target range of between 2 to 4%. The main drivers basically the higher food and non-alcoholic beverages, higher transport costs and higher utility costs, which are very much related to the elevated global food and energy prices. But on top of that, we also have the weakening of peso against US dollar. As far as year-to-date, peso is the weakest currency against US dollar among the ASEAN 6 currencies. And with that, we revised upward our inflation forecast for Philippines for this year to 5.3% from 4.6% previously. And for next year, we also revised it up to 3.1% from 3.9% from 3.3%.
Do you think the BSP will need to hike rate more aggressively to tame inflation pressure, and will this really help given the cost push nature of the inflation?
Yeah, in June, before the release of the June inflation numbers, BSP did hint that they are looking at a total of 50 basis point rate hike in the second half of this year. But after the release of the June inflation numbers, which is higher than expectation, BSP saying that there could be possible of 100 basis point rate hike in the second half of this year, and also not ruling out 50 basis point rate hike in the upcoming policy meeting in August. We think that this is mainly because of the weakening peso against US dollar, and we estimate that for every 1 peso depreciation against US dollar could push up inflation by 0.31 percentage point over the 12 months period.
Thanks, Zamros. We'll move to Joye. Joye, on Thailand, looking at the same topic, inflation, looks like it is not in a better position than Philippines. Headline CPI jumped to 7.7% year-on-year in June, which is a 14-year high. What drove the increase, and any sign of inflation receding in the coming months, and our forecast for 2022?
Good morning, everyone. So Thailand's inflation print at 7.7% is the highest in the region. It was driven by the surge in food and energy costs, as well as a weaker baht. On the other hand, core inflation, which strips out raw food and energy, remained relatively soft at 2.5%. Transport costs jumped by 15% as motor fuel prices accelerated by 40%. And this came on the back of the hike in diesel prices for the 4th time since the 1st of May to 35 baht per litre as of 13th June. The government will subsidize 50% of the diesel prices between July and September if the retail price exceeds 35 baht per litre. Electricity costs also jumped by 33%, with tariffs being raised by around 6% for the period of May to August because of surging energy costs. Food costs also surged by 6.4%, driven by meat prices, cooking oil, as well as prepared food. Given the higher than expected price pressures to date, with the first half now tracking at 5.6%, we raised our inflation forecast by another leg to 6.3% from the previous 6%. And according to the Commerce Ministry, the surge in prices came even as businesses are still largely withholding from passing on costs to consumers. In fact, the producer price index rose by a faster 14% in June, nearly twice the pace of inflation. And the Commerce Ministry cautioned that price pressures will extend into the third quarter, before falling sharply in the fourth quarter because of last year's high base. We think there is still going to be more cost pass-through to consumers in the second half of the year, hence our increase in the inflation forecast.
Any change to the forecast on the Bank of Thailand rate decision?
Yeah, so we are now expecting the BOT to hike 3 times compared to the previous estimate of just 2 times to tackle inflation. There are 3 remaining meetings this year in August, September, and November. So we are looking at a 25 bips hike in each of the meetings. The BOT governor commented in a seminar yesterday that with inflation hitting a near 14-year high, the BOT has the duty to anchor inflation expectations. And he added that Thailand will only gradually increase interest rates to tackle rising inflation and ensure that the economic recovery is not interrupted.
Thanks, Joy. We'll move to Andy on FX. Andy, in your report with the title, Trading the Inflation Recession Risk, can you share your recommended FX strategy? And looking at the dollar strength recently, it appears to be fairly relentless, and the DXY index has increased further to almost 108, up by about 10% year to date. How high do you think it can go?
Yeah, morning, Winson. I think growth fears, remain the key thematic driving FX moves, so that has been supporting the dollar somewhat. Our view on the dollar front is that as of late last week, level is about 107 on the Bloomberg index. We think that the resistance is probably towards the 109 levels or 110 levels. Support is at 105, so it could possibly go towards 109. And what are the drivers that will push it towards the 109? Possibly the last sharp move in the DXY is largely on the back of declines in the euro and sterling, and I think in part also due to growth fears. On the euro front, the euro falling further, we think it's gonna could point, if it breaks the 103.50 support, it could point towards parity. I think with the PMI numbers coming in lower than possibly expected and new foreign orders falling, activity momentum slowing down, we could see a weak outlook, active paring back in market expectations also for the ECB tightening. So all that points towards euro falling off towards the parity level, possibly increasing probability. On the sterling front, which is also a weight in the dollar index, we think that there's probably going to be a bit more political risk premium coming out from sterling front, and markets have not priced in the risk premium into the sterling fully. And I think some of the political pressures probably could actually weaken sterling a bit more. So altogether, if you add that into consideration, I think dollar could actually still continue to be supported in the near term. So towards the 109 resistance level, and if that breaks, it'll be a bit further as well. So on that basis, I think dollar could still see some support. Winson.
And on ASEAN FX, what is our latest forecast?
There are a few revisions that we made in the last monthly, which was released a few weeks back. We've actually calibrated the yen as well as most Asia, Japan FX lower relative to the dollar. If you look at some of our forecasts, notably for the yen, we've actually revised the yen a bit weaker towards the 137 level from a 130 level to end the year still about 132 on the back of our view on the dollar front. On the renminbi, we've also revised it slightly stronger towards 675 from our last 680, given the developments out of China in terms of some of the movements out of the lockdowns. But on the Asian front, we've actually revised most of the currencies a bit weaker. For example, on the Sing dollar front, slightly weaker towards 137, ending there at 136 from the 135. No changes on the ringgit front, which still remains at 435 for third quarter, end the year at 430. But we have revised actually for Indonesia to end the year at 14,500. And peso, we've revised it higher as well to end the year at 54 from our previous 52. But like what Zamros mentioned, we're actually factoring in some expectations of a BSP move as well to meet some of that forecast outlook, and Thai baht as well revision. So in general, Asia, Japan revised a bit higher a few weeks ago in our monthly. Vincent.
Thanks, Andy. And we'll move to Brian. Brian, you have a big report on Vietnam economics and you wrote on the growth in Vietnam's digital economy, how the pandemic has pushed companies to digitize and the plans ahead. Can share your findings?
Yeah, morning, Winson. Morning, everyone. Yeah, so the note provides a peek at Vietnam's digitalization journey. Vietnam aspires to break through the middle income trap to become a high income country by 2045, and digital transformation is regarded as one of the key strategies to boost productivity and long-term growth. The digital economy has grown significantly over the past decade, reaching 8% of GDP by 2021. The government aims to grow the digital economy to 20% of GDP by 2025 and 30% of GDP by 2030. The young and tech-savvy population provides a head start for digitalization, with around 70% of the population roughly is below 35 years old. Internet penetration is fast growing at 70% of the population and predominantly mobile-based. Internet speeds have risen rapidly. Mobile internet speeds have become the second fastest in ASEAN. These demographic and technological advantages have helped Vietnam's internet economy to grow into the third largest in ASEAN. The GMV is expected to hit 57 billion USD by 2025, only behind Indonesia. E-commerce has been a key driver, with shoppertainment activities such as live stream sales and online mini game contests, as well as online grocery shopping gaining popularity last year. The pandemic has changed consumer habits. 97% of the 8 million new digital shoppers during the pandemic were still shopping online as of end 2021, and 99% intend to continue doing so. Cashless payments are growing rapidly. A survey of retailers by e-commerce firm Sapo revealed that cashless payments last year made up 73% of total retail transactions. Visa's consumer payment attitude survey indicated that 95% of consumers used cashless payments methods last year. Vietnamese consumers are second in ASEAN behind Thailand in terms of positive attitudes towards cashless payments. That's measured in terms of preference for shops that accept cashless payments, planning to use cashless more often, viewing cashless as a safer way to pay, and supporting government initiatives for going cashless. Mobile wallets are strongly preferred over credit cards. There are more than 40 licensed e-wallet providers in Vietnam, with 3 wallets, Momo, Mocha, and ZaloPay, accounting for more than 90% of the market share combined. A pilot initiative called Mobile Money was launched by 3 major telco firms in early 2022 with the blessings of the State Bank of Vietnam. This allows consumers to pay for small value purchases through their mobile phone account, make transfers as well as deposit and withdrawal services without any need for bank accounts or even an internet connection. Mobile money will promote greater financial inclusion, particularly to the rural unbanked. Vietnam ranks second among the world's most unbanked nations, with 69% of the population not having a bank account. The country is also becoming a magnet for startups in ASEAN, part of the Golden Triangle with Singapore and Indonesia. Investors are attracted by Vietnam's strong growth prospects, the fastest growing middle-class consumer base in ASEAN, and expanding digital ecosystem. There are 4 homegrown unicorns and 11 startups worth more than 100 million USD out of 4,000 startups in total. The unicorns are Momo, an e-wallet company, VNPay, QR code payments, VNG, which is an online gaming company, and Sky Nevis, which is a blockchain gaming company and also the creator of the immensely popular game Axie Infinity. 3 unicorns were minted over the past 2 years, VNPay in 2020 and Momo and Sky Nevis in 2021. Like many other countries, the pandemic was a catalyst for businesses to step up on digitalization efforts. The percentage of firms investing in digital tools quadrupled from 5% in June 2020 to 21% in January 2021, however, remains relatively low and restricted to simpler business functions, especially in the case of SMEs. The economy-wide adoption of new and advanced technologies like big data or AI is still very limited. Uncertainty about the returns to investment, lack of know-how, and insufficient access to external financing were cited as the top barriers to technology adoption for SMEs. There is high demand for IT talent as businesses digitalize. Businesses face hiring difficulties due to a limited stock of qualified workers, including computer programmers, IT engineers, technicians, and design workers.
Vietnam has a shortage of digital skills, ranking all the way at the bottom of ASEAN 6. The talent crunch is partly caused by shortcomings in the access and quality of higher education. The tertiary education gross enrollment ratio at 29% and gross graduation ratio at 22% as of 2019 lags behind regional economies. The government regards digitalization as a key policy priority, aiming to digitize all public services by 2030 and rank within the top 30 of the UN e-government development index, of which it is 86 currently. Notable initiatives include the National Public Service Portal, which has integrated more than 3,500 online public services so far, National Data Exchange Platform to improve data collection and sharing practices among government agencies, and chip-based citizen ID cards. Assistance programs are supporting the digitalization of SMEs and promoting startup formation. Digital skills will be taught at all levels of the education systems. New majors in digital transformation, including AI, cloud computing, blockchain, IoT, etc., will be offered at the higher education level, while cohort quotas for engineers, bachelor degrees, and technical workers will also be increased. So for more detailed findings and charts depicting Vietnam's progress in digital transformation, please be sure to look through the full note.
Okay, thanks, Brian. Huy, on Vietnam equity. Huy, what are the key themes and the recommended strategy you have for second half this year?
Morning, Winson and everyone. So my recommendation is to buy on the market winners. Although GDP growth in the second quarter set a multi-year high, market reaction was quite bearish as investors are now concerned about the stance of central bank to cope with rising inflation. However, in this issue, we adopt a positive view. First, our average inflation forecast is maintained within 4% target of the central bank. Second, about interest rate, we observe market rate, not policy rate, increase around 40 pip in the first half, and we expect another 30 pip in the second half. So the total is 70 pip, but it just bring enough to bring it back to pre-pandemic level. I mean, interest costs will increase, but still manageable. This don't even take into account the 2% interest subsidy for around 20% of total outstanding loans for COVID-affected companies. So the interest rate increase, we believe, will not disrupt the economic recovery. And lastly, about credit growth. Although credit growth in the second half is less than the first half, 5.5% compared with 8.5%. Total room for this year, full year, is still 14%. And the central bank, SBB, has not lowered this target. 14% is the average in many years, and 2018 and 19 actually the best years in terms of GDP in past GDP growth in the past 10 years, with just 14% credit growth. So given the fact that the government now aims for 7% growth, GDP growth from the previous 6 to 6.5% growth, we think SBB may be more conservative in the second half, but not hawkish yet. Generally speaking, we take positive views about inflation development and monetary policies in Vietnam, and expect the central bank to continue its accommodative stance. Therefore, we think the market correction is a buying opportunity.
Okay, thanks, Huy. We'll move to Richard on Indonesia coal. Richard, you wrote that coal prices have passed the peak in this cycle, and it is at the beginning of a downturn. Why? And any thought on how low coal prices can fall?
Yeah, hi, morning everyone. So yeah, we are cautious on the sector as we think that high coal price is not sustainable, given that we have seen demand has started to show some weakness, particularly from China, which account for more than 50% of global coal consumptions. Due to their recent COVID outbreak and their lockdown, we have seen their monthly coal consumption has started to normalize. Although we think that recovery might pick up in the second half, but we have seen that there have been building inventory in the past few months ahead of their winter season at the end of the year. So we think that demand might remain weak throughout the year. And then from the global perspective, we also see risk of global economic slowdown and also recession risk coming from Fed tightening and then high energy prices as well as China COVID outbreak. But I think the main risk coming from the sector is from the supply sides, because we do expect more supply to come online over the next 2 years, mainly driven from China and India, which account for more than 70% of global consumption and productions. Both China and India, they plan to raise their production by about 700 million tons over the next 2 years. That's about 9% of global supply coming from these two countries alone. And to illustrate the impact, both China and India import about 500 million tons annually. So I think if this expansion plan is properly executed, we're going to see import demand will significantly decline. And then although we see in the near term, price might remain elevated, particularly for the high CV coal price, because we do see a higher incremental demand coming from Europe as they start to rely on coal due to lower gas supply from Russia. We see about 40 million tons incremental demand coming from Europe. And on the supply side, we don't see much of an increase in the high CV supply. So if you take a look at the coal price benchmark, we see a huge gap from the high CV coal and the low CV coal price. And we do expect the gap between the high CV and low CV coal price to remain wide in coming years, which present further risk for Indonesia coal miners. Taking all into account, we expect price to start to decline next year. With our price assumptions, coal price next year will be at $150 per ton next year, down from $250 this year. And our long-term price assumptions is at $80 per ton.
Just very briefly on the sector, is coal stocks a sell?
No, coal stocks still neutral, because valuation, they are not expensive, currently traded about 6 to 8 times price to earnings. But we do advise investor to remain selective in the sectors. We like Bukit Asam in the sector, which is our top picks in the sector due to their huge exposure to domestic market. We like Bukit Asam because government currently is planning to set up a public service agency called PLU to collect levies and use the fund to provide subsidy to miners who sell their coal mine to PLN, which is our state-owned electricity provider. So assuming this regulation is implemented, we are going to see a 42% earnings upside potential for Bukit Asam, their huge exposure to domestic market. So yeah, we remain selective in the sectors.
Okay, thanks Richard, and thanks everyone for joining the call. Have a good week.
For specific investment advice, discuss with your trading rep and check out market insights on the Maybank Trade app. Also follow us on Spotify and Apple Podcasts. Have a good trading week. I'm Noelle Lim on ASEAN Speaks by Maybank.